I have a 3-step formula that I've back-tested thousands of times, and every single month that I tested it, it was profitable in the long term. No indicators, no complicated concepts, just pure price action. And by the end of this video, you too will know this strategy and will be able to take consistent trades just like this one and become a profitable trader. To jump right into it, the first step involves identifying our key levels. When it comes to identifying key levels, this is arguably one of our most important steps, because if you even slightly this part up, it will ruin the whole strategy. One of the very first things that every trader learns is support and resistance. A level that holds is support, a level that rejects is resistance, and when we break out of this level, we'll get a big move. Simple enough, right? I mean, literally every trader has learned this, so you're probably wondering, why are we even going over this? And you probably already knew this. But what if I told you that you're probably doing this completely wrong and it's causing you to lose money and blow your account? Now, the example I showed you earlier was simple and easy to spot, but as we all know, it's not that easy in a real live market. And your chart probably looks something like this. Because if you're like most traders, you're drawing random lines all over your chart trying to find these magical levels that are going to make you money. And you're probably looking at the daily chart, the weekly chart, the 4-hour, drawing lines and boxes everywhere. But what if I told you there were only 2 levels that actually mattered? And that every single day, the market gives you everything that you need to trade in the first 5 minutes of the day. Now, when we say the first 5 minutes, we mean the first 5-minute candle that starts at 9:30 a.m. EST, and this works for any market. And once this first candle closes, you're going to mark just 2 lines every single day. And that is going to be the high of that first 5-minute candle and the low. Find the levels for this strategy. You don't need any complicated analysis, no multiple time frames. You just need these 2 simple lines that the market gives you every single day. This alone will remove half of the losses from your trading simply from making everything simple and straightforward. I want to be clear that if you do not understand this part of the strategy and stay consistent with it, the strategy will not work. Now, you may be wondering, why the first 5-minute candle? Well, these aren't just random levels. As you can see, the highest volume of the trading day occurs at the market open. And this is a key part of why the strategy is so powerful. But to make money, drawing these lines isn't enough. You need to know exactly when and how to act when price hits these levels. Because anyone can mark these levels. Most traders fail when it's time to execute. And that's what we're going to go over in step 2 of the strategy, which is how we're going to identify displacement in the markets. Displacement happens whenever we break above the high or below the low of the first 5-minute candle. So this right here is the 5-minute candle, and we're going to be looking for the break on the 1-minute chart. So if it's that simple, we just trade whenever the market goes through one of these levels, right? Well, definitely not. We want to see more than just a wick push through the low of this 5-minute candle. But here's where things get interesting and where most traders mess this up completely. And that is because a break of the high or the low alone is not a displacement. So this would not give us a trade entry. So it must be a candle close that confirms our trade, right? And this would be wrong again and cause you to lose trades if you're entering on a simple candle close outside of the range. And as you can see here again, the market barely wicks outside of the range, and what happens? The market falls back down, and this pattern will continue until we get one specific behavior that gives us confidence that we're going to get a big move. Understanding this is key to avoiding the losses that will cause you to blow your account and chop yourself to pieces. So when any of this is happening, you need to be able to be patient and stay confident that you need to wait for displacement. Now, the reason that we wait for this displacement is simple. When we get this displacement, we get very large market moves we can make insane amounts of money on. Now, what we're looking for to confirm a displacement and why it's so important is momentum. And this shows us that big players are active in the market. And if we are trading with the big players, we know that odds are we're going to have a winning trade. And inside this leg in price action, there is one specific behavior and pattern that gives away the big players' positions and helps us know their true intention. And guys, this is the most critical part of the strategy that separates winning traders from losing traders. And that, my friends, is that you need a simple and repeatable way to confirm this momentum. Otherwise, you will never find consistency because you'll be trading based on your feelings and not reality. Now, I want you to notice right here. there is an empty space between these two candles because the move was so violent. What I mean specifically is there is an empty space between this candle's wick right here and this candle's wick because this candle moved so violently with so much momentum that it left a gap. And this is what we call a fair value gap, or FVG for short. And this fair value gap is the core of our strategy. Now you know how to identify momentum mechanically and where to look for it at. But we still have one more step in our 3-step strategy. And this final step is what turns analysis into a consistent strategy. Because it's one thing to be able to spot market moves and another to make money from them. Let's go ahead and start with a third and final step that makes this strategy so powerful. And that is risk to reward. This involves a simple way to get a fixed 2-to-1 risk to reward ratio on every single trade you take. This means for every $100 you risk, we will target $200 in profit. So let's take a look at this example before we hop over to a live chart and look at some others. Right here, we have our displacement entry confirmed, because as soon as that fair value gap is created by this third candle closing, we can go ahead and enter the trade. Since this is a down close candle, it entered right there, and this line is where you see our trade entry. Now for our stop loss or our invalidation point where we will cut our loss if the trade moves against us, we want to use the first 1 minute candle's high that closed outside the range. This is important not to use the candle that started the fair value gap, but the candle that first closed under that 5-minute low or above the 5-minute high. So in this candle, we are selling the market since we're breaking down to the downside, and we're going to put our stop above the first 1 minute candle that closed outside of the range. But this leaves us with the most important part of the strategy, which is where we take our profits, because it's one thing to find a good entry and another to exit at the right time. For this strategy, we'll be targeting exactly 2 times that risk amount for our take profit order. Now you may be wondering, is 2-to-1 risk reward profitable? And the answer is yes, even with only 40% win rate. In fact, your break even above 34%, and if you have a 40% win rate, meaning you only win 4 out of 10 trades, then this is a profitable strategy. And as you saw in the test earlier in the video, this has a 67% win rate, which makes this strategy extremely profitable if you stay consistent with it, which is why this is the only strategy you will ever need. Now let's take a look at a live chart example to show you how to actually execute this, place your orders, and give you even deeper of a look. That way you have everything you need to trade this consistently. So we're here on the 5-minute chart of NASDAQ, and this is just last week on the 21st. As you can see, we marked out the first 5-minute candles high and low. So now we're going to go up here and click the 1 minute button to take us to the 1 minute chart. Now remember, we're looking for a very specific behavior to happen in order to enter the trade. Not just this candle closure, we need a fair value gap. As you can see, that third candle closed, confirming that we have a fair value gap right here. Now at this time to execute your trade, you're going to go over here to the left on TradingView, and you're going to click a long position, considering this is a buy since we broke above the high. If it were a sell, you would click short position. You would enter the market right here. You would take your stop loss and put it under the first candle that closed outside the range. And for your target, you would get a fixed 2-to-1 risk to reward. So at this time, you'd be good to enter the trade. So as you can see, we'd be risking $465 to make $930 in profit. At this time, you can sit back and let the market do the lifting for you, confident that you will have a winning trade. One of my favorite things about this strategy is how fast the targets hit. If we look right here, this target hit in just 9 minutes. $930 in 9 minutes doesn't sound too bad to me. And now you have the complete strategy and you've seen it work in a real example. But here's what I know is going through your head right now. You're probably thinking, well, this looks simple, but what if I mess it up? What if I start second guessing myself? What if I fall back into my old pattern of hopping between strategies when the first trade doesn't work? And look, I get it. You've tried strategies that seem simple, but somehow you still found ways to sabotage yourself. Maybe you exited trades too early, or you started looking at other indicators or other levels just to confirm, or maybe you got a funded account and then you blew it. But here's the thing. The strategy itself isn't the hard part. The hard part is staying consistent, not blowing your accounts, and actually getting that first payout instead of just passing more challenges. So I actually made a whole other video that breaks down exactly how to avoid these psychological traps, how to actually get funded without fear, and how to become a consistent trader without the emotional roller coaster. I'll leave the link to that video in the top of the description down below. It is probably the most important video that you will ever watch if you're serious about trading. Now you have everything that you need in order to start using this strategy. Remember, mark your levels at 9:30 a.m. Eastern, wait for displacement with a fair value gap, enter with your 2-to-1 risk to reward, and stay mechanical. That is it. The only trading strategy you'll ever need.